the gold market is the next leg up for gold prices and silver and copper and so forth is going to come on the back of a depreciation of the dollar. We've seen this historically. I mean, usually when the dollar tends to depreciate versus other fiat currencies, it sort of unleashes other ideas. Like natural resource companies tend to do very well. We see emerging markets doing very well. And economies that have a very strong link with commodities tend to do also very well. And so it wouldn't surprise me if we see another major leg up in gold prices, along with silver and other metals and copper and so forth, on the back of these trades.
As an investment, gold helps enhance portfolio diversification, acts as a store of value, and offers a hedge against systemic risk. In addition, gold has outperformed traditional asset classes over the last 20 years. Gold and silver prices were firmer in early U.S. trading Wednesday, as bullish daily outside market forces supported buying interest in a weaker U.S. dollar index, lower U.S. stock index prices, and higher crude oil prices. U.S. Treasury yields have also stabilized this week, which is somewhat friendly for precious metals market bulls. Tavi Costa, partner and macro strategist at Crescat Capital, gives insights on the future of the U.S. dollar and the implications for global markets. Based on fundamentals, Tavi Costa predicts a weakening U.S. dollar will drive the next upward movement in gold, silver, and copper prices. Silver has been up 33% year-to-date, gold has been up 15.8%, and copper has gained 19.1%. Since 1972, it has fallen by 99% against gold and lost 90% of the purchasing power of real goods and services. From a technical standpoint, Tavi explains that the gold market has risen for various reasons, including significant gold accumulation by central banks. He suggests that we may see a major surge in these metals, and he focuses on the potential opportunities in mining and related sectors, which have been overlooked but could become significant winners. Newmont Corporation, one of the world's largest gold miners, saw a 32% year-over-year increase in gold production, reaching approximately 1.68 million attributable ounces in the first quarter of 2024. The company is set to build on this growth trajectory with a forecasted 6.93 million attributable ounces for the full year and significant contributions from other metals. Despite skepticism, the mining sector is poised for significant growth due to increasing demand driven by electrification and infrastructure needs. Costa anticipates that investments in mining will rise, reflecting its reinvigorated role in the economy. Now we present the clips of Tavi Costa's insights from his recent interview. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
The gold market and other metals have started to move for somewhat different reasons, but also connected. Number one, gold accumulation by central banks. Well, that's another domino that kind of fell that a lot of people thought was impossible to happen again, and here we are. One of the largest accumulations of the metal that we've seen in history. But really, all these things are happening right in front of us. And I think that the gold market is the next leg up for gold prices and silver and copper and so forth is going to come on the back of a depreciation of the dollar. We've seen this historically. I mean, usually when the dollar tends to depreciate versus other fiat currencies, it sort of unleashes other ideas. Like natural resource companies tend to do very well. We see emerging markets doing very well. And economies that have a very strong link with commodities tend to do also very well. And so it wouldn't surprise me if we see another major leg up in gold prices, along with silver and other metals and copper and so forth, on the back of these trades. So that's why my main focus here has been on this, because I do think there's lots of ramifications, and a lot of times in trading and in macro, the big opportunity is not in the main asset class. It's in the sort of the knock-on effects that you see, and maybe mining and other things that have been completely being pushed out as not being, from being opportunities one day to now being completely neglected, could potentially reemerge to be big winners. And so that's where I also have been trying to deploy most of the capital here at Crescat and personally as well. Investors will do this depending on their risk profile, but in my view, the big alpha opportunity here is definitely on the mining side. And main reason is because how inefficient the market has been, and how things have been so mispriced historically. and our views about where electrification and the needs for more infrastructure developments is actually going to drive a major side of the demand, and the infrastructure needed for that is also going to be a big side of it. I do think that mining is going to become again a critical part of the economy. We look back in history, back in the 60s or so, when you see the fixed investments that were made by private companies in the mining industry used to be accounted by about close to 20% of GDP, and today is 0.3%. I think that those measurements are likely to change. The main reason for this change has been mostly because of how much the U.S. has been actually dependent on importing metals in a large way. And I think that, given what's happening with the escalation of geopolitical risks and all sorts of things going on, I do think that metals and mining as an industry will come back as a critical part of the economy in the nations, and that's likely to increase the investments in that part of the industry. And so, ultimately, that money flows into the different parts of the mining industry that have been for a long time ignored, and the skepticism of this, what I call one of the most historically unsupported views, that we're likely to see gold prices rising, but not the miners won't follow. That's just not what happens through all history. Usually when you have a gold bull market.
During the interview, Tavi Costa expressed his strong preference for silver, highlighting its potential for significant gains if a gold bull market materializes. He predicts that silver could surpass previous highs and achieve new levels due to its increasing use in solar panels and monetary value. Improved sentiment has coincided with heightened industrial demand, particularly in the Indian market. Silver demand is projected to grow by 2% in 2024, with the Silver Institute forecasting that industrial demand will increase by 9%. Photovoltaics alone are expected to see a 20% gain. Silver prices fluctuate based on multiple variables, such as supply and demand, geopolitical events, currency strength, economic data, and changes in investment trends. The historical spot price of silver has been characterized by high volatility, with fluctuations over the decades. Regarding debt management, Costa considers multiple rate cuts and yield suppression central strategies. He predicts these measures will contribute to a notable dollar depreciation, affecting broader economic trends. Let's get back to the interview.
I love silver first and foremost. I think silver is if you're a believer that we're going to see a gold bull market and you want to take more risk and potentially higher reward, silver is, to my view, to go back to the levels that we saw in the prior highs and actually a breakout from those levels and go much further out than people even believe. And that's because of its place in the world today in the global economy as solar panels. I mean, solar panels used to make up, single digits of the supply of silver. And now it's actually, getting a lot closer to actually double digits, but much higher levels. I mean, it's been growing exponentially in terms of just that alone. But what people forget is the monetary aspect of silver itself when gold starts moving. And I think that that's coming too. My main focus has been in primary assets that have silver as a production to begin with. Zinc is another one that I think it also offers an incredible opportunity. If you look at the zinc price, it's been in an upper channel for a long history. We're talking centuries. And now we're actually at the bottom of that channel right now, and a lot of people are very bearish about that in the metal. And I do think that we're probably going to go a lot higher. I love copper. Copper is sort of the obvious metal that we should all be focused on for electrification reasons, but certainly some other opportunities where that I think Senzel said this phrase that I love. Great money is made where capital lacks interest, and I think that the mining industry, gold and silver, are certainly probably in the forefront of those opportunities today. And so, of course, there's going to be other metals and businesses that have their own uniqueness in terms of attractiveness to invest. But I think that the big macro trend to me still is on silver and in terms of the big potential to the upside that you ask for. So to me, that would be my favorite metal. Multiple rate cuts. And the reason for that is because 3 rate cuts would reduce the debt payment by about almost 1/3. And so that basically doesn't solve the issue, but certainly put us in a better position. We have to think about, historically, how have we done to deal with such a problem. Can the U.S. Carry more debt relative to its GDP over time? The answer is yes, by the way. If you looked at, throughout history, the British Empire back in the 19th century, it actually carried over 200% of debt to GDP. Japan did that not too long ago, but I prefer using the British Empire because it was the reserve currency at the time. And so, not being the reserve currency changes the way you can politically act towards your monetary system. And so the idea here is that there's really a few things you could do. One is you can restructure your debt, which was what the British Empire did back in those days. They basically increased the length of their debt and so forth, and had to create measures to bring back liquidity into their treasury market, in which, by the way, it was the most liquid instrument of the time. Does that sound familiar with the U.S. treasuries today? The second thing they did was austerity, which sounds very simple. It's basically reducing, the excessive spending in the government and trying to increase taxes. That could come here, but I'm not really seeing this given the AI revolution and what's happening with electrification and onshoring, deglobalization. I wouldn't put too much weight there. I do think we're going to get there, but I don't think I would put too much weight on that situation. But the third thing that economies have done in the past is the suppression of yields in order to reduce the cost to service the debt. I think that's highly likely in the next 2 to 3 years. And if we see that, that probably will have to be a readjustment of the dollar. Pay attention to the fact that we've seen one of the tightest policies of the Federal Reserve in history here in terms of how much they were able to hike rates in the short term. And the dollar is not taking off, right? I mean, the dollar has been actually, if you looked at other currencies, we can see a combination of currencies trying to form a bottom here, a historical bottom, and hitting a resistance, and potentially when they break out, like the British pound did recently, these things can start moving on the upside in a very big way. And that's what unleashes a lot of other macro trends, in my opinion, that I'm paying close attention to. I'm happy to discuss that. But that's really the key of the markets, is where the dollar will go right now. And I think it's going to go a lot lower.
Gold prices are expected to hit $2,500 by the fourth quarter of 2024. The structural drivers that have helped gold's rally so far will remain a critical bullish driving force, with J.P. Morgan economists expecting a Fed cut in November. How do you think the anticipated weakening of the U.S. dollar will shift investment in the precious metals and mining sector? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.